Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, let's start in the U.S., where the yield on the 10-year Treasury's fallen since February, now to under 1.4%. It seems this would be in part because of the pandemic and the new variants. And we also see the 20-year and the 30-year down, and notably the gap between the 2-year and the 10-year is narrower than it was. So what's the significance of these falling yields when a lot of investors had expected them to rise?
Long-term U.S. Treasury yields are a very important barometer that contain lots of information on the future of U.S. economy. Basically, when it goes down, it is interpreted as a sign of economic decline in the near future. Yields on 10-year U.S. government bonds reached fresh multi-month lows on Wednesday below 1.4%, reflecting investors' anxiety about the economic outlook and new concerns about the highly contagious Delta variant of COVID-19. Actually, yields climbed sharply in the first quarter of this year, but they have been dragged down in recent months by investors reassessing their optimistic forecast on U.S. economy. So if longer-term U.S. Treasury yields, 10-year, 20-year, and 30-year, go down further, it is necessary to reevaluate the speedy U.S. economic recovery and its effect on global economy.
Right. All of us watching that, of course, and staying in the U.S., the minutes of the latest Fed meeting show that officials are still patient about a move to start tapering, which is another thing everybody's been watching. And that was apparently a relief to investors. The S&P and the Nasdaq yet again at new highs on Wednesday. The Dow rising a little too. What's the story in the global stock markets?
U.S. market have recovered from Tuesday's loss on Wednesday. Dow Jones Industrial gained by 0.3%, and Nasdaq edged up to positive return at 0.01% return. Particularly, U.S. Fed's weaker signal on tapering helped to recover both of U.S. markets and European markets. According to the minutes of last month's FOMC meeting, which was released yesterday, the majority of Fed officials believe that U.S. economy is not recovering solid yet, and therefore it is too early to consider tapering now. But the Asian market dropped in a large scale today due to rising concerns on COVID variant spread. Tokyo dropped by 0.9%, and Hong Kong also dropped by 2.6% today.
Right, and that was a concern here in Korea, too, the rising coronavirus infections, despite it being earnings season in Korea, and we've been seeing quite strong earnings from companies like Samsung and LG. So tell us about the domestic market.
There was a huge drop in domestic market today. Kospi lost by 1%, and Kosdaq also declined by 1.2% today. In both markets, foreign investors and domestic institutional investors' aggressive sales led the market down to a huge drop. Most of all, quickly increasing coronavirus infections in Seoul metro area gave a possibility of another wave of COVID pandemic. The domestic markets sensitively responded to this unfortunate increase of infection today. But thanks to more COVID infection, online business stocks like delivery service and online education gained in two-digit returns for today.
And let's zoom out for a minute and look at data that shows that in May, Korea posted a current account surplus of almost $10.8 billion, and this was the 13th monthly surplus in a row back since the pandemic interrupted that in 2020. So again, we see a rise in exports of petrochemicals, cars, chips. What do you make of this data, Professor?
Last year, Korea's overseas shipments have been battered by fallout of the COVID-19 pandemic. But the pace of slump has eased since September last year as major economies like Chinese economy slowly began reassuming business activities and easing border lockdowns. Korea's current account surplus sharply widened in May as exports maintained strong growth and companies received the dividends from overseas affiliates. The current account surplus reached almost $11 billion in May, widening from a surplus of $8.5 billion against a year ago. Exports, which accounts for half of Korean GDP, jumped 46% on year in May on the back of a brisk demand for chips, automobiles, and petrochemicals. Import gained 38% on year in the same month. So it marked the 13th consecutive month for the country to post a trade surplus.
Indeed. And again, with what looks like a fourth wave of the coronavirus pandemic here in Korea, this might put a snag in the Bank of Korea's plans to normalize its monetary policy if this slows down the recovery. So what can you tell us about the situation, Professor?
Korea's daily new virus cases jumped by the most in about 6 months Wednesday, as we know, and it boosted fears of a fourth wave of infection over the summer. As of now, Korean economy is on the modest recovery track, but its upward momentum may lose steam due to a resurgence in COVID-19 cases. Korean government's previous economic growth forecast for this year, 4.2%, is only possible under the assumption that COVID-19 is totally controlled. Korean economy is on a recovery track amid the solid export, as we talked about, and domestic consumption. But it also faces high economic uncertainty from the fast spread of more contagious Delta COVID-19 variant and spiking virus cases. So if COVID spread continues with current pace, sooner or later, government should be making a tough decision between containing COVID-19 through more shutdowns and reviving Korean economy with easing shutdowns.
Yes, and of course, Korea is known for having managed so far without the type of shutdowns that people have seen in other countries. And of course, everyone hopes that we can get through this one without too much disruption as well. I guess time will tell. Professor, thank you so much for sharing your insights with us, as always.
Thank you very much.